Welcome back to this special edition of Media Week. More coming up from the Upfront event in Sydney, but first let's take a look at the media sector's performance on the share market this week with Evan Lucas from IG.
It's been an interesting week in Media Week. Obviously, everything on the ASX has been caught up with regards to what has been going on in Washington, and most of the media stocks are on that same band. Having a look at something like Fox, they have had a better week after what was probably a bit of a sore week last week, considering we saw headwinds with the US dollar. They have popped back up and is one stock to watch. The other one to watch is News Corp. They are doing a little bit better again. As more and more people start to talk about where they're heading in the current financial year, we know they've got a fair amount of money on the balance sheet and do look like heading into things that they want to actually purchase. But the main thing to come out this week is definitely coming out today with regards to Ten's full year FY13 results. Was, as expected, down and down considerably. The full net loss came in at $285 million. Expectations had been for 277, and that was that really, really big one-off impairment charge that they announced in April for $222.9 million for licensing agreements. And they also had a fairly uptick in terms of one-off operational costs, around about $44.1 million. So taking all up costs to around about $336 million, and that's where that loss comes in. Big loss there, but you've also got to look at the EBITDA. EBITDA was okay at $46.1 million. That was actually slightly ahead of estimates. But all in all, it's not a fantastic result for Ten. Underlying net loss was $5 million. That is also ahead of expectations on the loss side at $1.2 million loss. So it is getting really rough over there, and that comes down to that, again, the eyes on screens just really isn't stacking up for Ten. And since Hamish McClellan has taken over, he's really started to try and rearrange that whole idea. So having a look at what he's talking about, it is all about premium sport. He's got hold of the Winter Olympics next year over in Russia in Sochi. You've also got the Commonwealth Game in Glasgow, and he talks about the Big Bash with the cricket. But it's whether or not he can actually drag the audience numbers and also the advertisement dollars required to pick Ten up. This is a longer-term story, it's a longer-term strategy, and it doesn't look like Ten will get sort of anywhere near the sort of numbers we were seeing a couple of years back for still a while to come. They've still got a fair amount of debt as well, so not a fantastic result. It's why you see Ten down around about 1.2% today, even as much as 1.8% when they opened up. And it looks like they'll continue to sort of hover around that 28 cents mark for a fair while to come. It does look like a fairly long story in terms of Ten, and Hamish McClellan does know where that's going, but all in all, the result today wasn't fantastic, and that's what we're seeing.
Now, back to the Foxtel Upfront event, which has been run in conjunction with MCN. Tell us about MCN for those who don't know, James.
Stands for Multi-Channel Network. It's the business that Foxtel owns that sells all the subscription TV for most of the channels on the platform. And we spoke to the Chief Executive, Anthony Fitzgerald. Tell us, Foxtel and MCN seem to spend quite a lot of time working with their advertisers, explaining the content. Do they do that more than maybe some of the free-to-air broadcasters?
I'd say that we don't do it any more or less than the free-to-air broadcasters today, probably equally. When I joined the company 10 years ago, we represented 17 analogue channels. Today, we now represent 55 digital television channels and over 70 websites and mobile sites. So the depth and breadth of our content today compared to when I joined the company 10 years ago is so significantly greater. And we have an amazing array of premium first-run exclusive content. So, yeah, there is no doubt over the last few years we've spent a lot more time explaining the content and the opportunities, the advertising opportunities that content creates for our advertisers.
And this is just the start of quite a lengthy summer sell for you, isn't it? Because your home up fronts start pretty soon too? Yes,
our first one is this Friday. We are kicking off with the independent agency, John Preston's agency Match. And that starts on Friday, and that's the beginning of an 8-week program across Sydney, Melbourne and Brisbane. We're very excited about what we're doing this year. We have rented a house in Mossman, which is the Australia's Next Top Model house. We have a house in Melbourne which features on Grand Designs Australia. So there's a very nice link with our channels and our content communities and the platform overall to help us bring our proposition to life for 2014.
Foxtel tonight have given us some details about TV Hits, the TV1 replacement, as well as Sci-Fi. Has that been out to market yet, and so has there been any reaction from potential customers?
No, it hasn't yet. Really, tonight is probably the launch of that and the start of our program to sell those two channels into market. Sci-Fi is obviously an existing channel. It's just going to be revamped and relaunched, and that's moving across to us as NBC, who's the global owner of the Sci-Fi brand, takes that back on board. And the new TV Hits channel taking place, TV1's place on Channel 101, I think is going to be a really exciting opportunity for us. That will increase MCN's commercial share to almost 23 to 24% commercial audience share of total television. So it's a great win for us and increases the size of our proposition.
Ad revenues sometimes seem to take a back seat in the subscription TV business model. Is that good or bad news for you guys? And is that sort of the equation changing at all?
I think it takes the right seat, James. The platform itself isn't as reliant on advertising revenue as, of course, a free-to-air terrestrial broadcaster is. But a lot of the individual channels rely very heavily on the ad revenue that we generate to produce content and to acquire content that continues to evolve our platform and grow the platform in this kind of virtuous circle. The more revenue we generate, the more we can invest in content, the more subscribers and the more technological developments that we can make. But our business is now annualised north of $450 million. This is a significant contribution to the total subscription television platform. So it's increasingly important.
Will the loss of domestic cricket on Fox Sports hurt your bottom line much, do you think, this summer?
No, I think that it's a shame that we've missed out on acquiring the cricket, but we have, I think, a very strong platform offering across Fox Sports across the summer, and at this stage we're not seeing any erosion in revenue.
And what can you tell us about the speculation that you've been linked with Network 10 as looking at maybe a joint sales force out there? Is that something we might see in 2014?
Look, I can't speak to that directly, James. We as a business, if you look at where we've come from 10 years ago to where we are today, we have acquired the representation rights to a lot of businesses, and we're always looking at opportunities to grow our business. And look, it's fair to say that for us to represent a free-to-air network, it would be a game-changing move in the marketplace. It would be a good fit for us. And, I think it would make sense to the agencies to have fewer touch points to buy television. So, look, I think it makes sense, but I'm not really going to comment.
Sounds like a yes, but you do...
No, it doesn't sound like a yes, I'm saying.
But you do represent other publishers of content, don't you?
Of course we do,
Not just
yes.
Foxtel.
No, across the board, through online, through mobile, and a whole range of other devices and content providers, not just the channels that live on the Foxtel platform. And we will continue to look for opportunities to grow our business. As this marketplace, and in fact the global media landscape is continuing to change at breakneck speed, we will always be looking for new opportunities to expand our advertising offering to our partners.
Stay with us here on Media Week, this special edition. More coming up after the break.